Welcome to the Stock Market Daily News podcast for Friday, March 13th, 2026. I'm your host, and here's your essential 2.5-minute market wrap for Thursday's trading session. Wall Street took a hard hit yesterday as surging oil prices rattled global markets. The Dow plunged over 700 points, closing down 1.5%. The S&P 500 lost 1.5%, while the Nasdaq slid 1.7%, its biggest single-day drop in weeks. Headlines around the world focused on one thing: Brent crude oil topping $100 a barrel for the first time since 2022, driven by escalating conflict in the Middle East and supply disruptions in the Strait of Hormuz. Stick with us for all the key details investors need to know, including the impact on major stocks, sector rotations, and ETF trends. Let's break down the major stories shaping the market. First up, the oil shock. Global crude prices soared after an Iranian blockade halted almost 20% of world oil shipments. Brent crude jumped 9% in one day to settle at $100.46 a barrel, up nearly 50% in the past month. U.S. gasoline prices followed suit, leaping to $3.59 per gallon. This spike in energy costs knocked equity markets worldwide, fueling fresh stagflation fears and wiping out recent gains across risk assets. For investors, keep a close eye on energy sector volatility. Oil companies rallied while most other sectors slumped. Defense stocks, on the other hand, bucked the downtrend. In India, defense equities like Bharat Dynamics and Data Patterns posted stronger returns, even as the Nifty 50 index lost more than 5% since the start of the conflict. U.S.-listed majors like RTX, also known as Raytheon, benefited from expectations of increased military spending. RTX shares hovered around $207 after reporting growing order backlogs and higher munitions output, up 20% in 2025. The clear takeaway: geopolitics is pushing defense stocks to outperform, but some analysts warn valuations are getting stretched. Turning to IPOs, market volatility has put new stock listings on hold. With the Sensex sliding 3% this week and global investors turning risk-averse, more than 140 firms with regulatory approvals are now waiting for calmer markets before launching. Bankers say appetite for new issues has dropped sharply amid wild swings and foreign investor selling. Expect a quieter primary market until stability returns. In crypto markets, Bitcoin and major tokens slumped as oil surged and risk sentiment soured. Bitcoin briefly fell below $69,400, erasing a relief rally from earlier in the week. Ether and Solana each dropped around 5% over 7 days. Analysts point to persistent selling pressure and investor uncertainty about how long oil disruptions and the war will last. Not all crypto news was negative, though. BlackRock debuted its new Ethereum staking ETF, offering traditional investors both price exposure and staking rewards, a sign of big institutions still building digital asset products despite choppy markets. Finally, a look at the path ahead for stocks. Morgan Stanley estimates the S&P 500 could see another 5 to 7% downside before the bull market resumes, with key technical support near 6,300. They cite ongoing volatility from the oil shock and the need for crowded stocks to correct further before a durable rebound. But the bank maintains a bullish outlook for the rest of the year, helped by broadening earnings growth and policy support. To recap, Thursday saw sharp declines across all major indexes. The Dow down 730 points, S&P 500 off by 1.5%, and the Nasdaq losing 1.7%. Oil shocks, war in the Middle East, and soaring defense stocks define the day, with crypto sliding and IPOs pausing amid the storm. Looking ahead, investors should watch next week's Federal Reserve meeting and ongoing geopolitical developments for market direction. Make sure to subscribe, follow us online, and tune in daily for smart, concise market insights. Thanks for listening.